I want to give you some context of where we are right now in terms of the market cycle that we are going through. It's fun when the market is going up, but when it slides down, everyone's like, oh my God, I hate this part of investing, but it is a part of the game that we all are going to go through. So I want to give you some context. So where exactly are we? The thing I need you to take away from today is I don't want you to confuse a bad week or a bad day in the market with an actual bad performing market. We're really just coming off highs. But of course, COVID is kicking back up. Election concerns are right around the corner. We're not exactly sure who's going to be our leader. And that is making the market a little bit timid. And that's the part of the reason why we slid down today and why I said 2 weeks ago, we were going to come down. These are the levels that I'm watching. So for everyone watching at home, please get out your camera and screenshot this. As long as the S&P future stays between 3205.50 to 3397, kudos to Kayla. Happy anniversary to you. Dow, as long as the Dow stays above 26,500, and as long as the NASDAQ future stays above 10,624.75 to 11,544.75, we are okay. Somebody just said it in YouTube. 5 to 10 years from now, we will not care about any of this. But if the Dow drops below 3205.50, that's when I'm going to say, okay, we may be in for a wild ride. So if you guys have that, screenshot it. I'll go to the next slide and just say yes for me in chat. But these are the key levels to watch. And for those of you on E-Trade, TD Ameritrade, please set an alert here. So if we fall below, you know that some of the stocks that we've been waiting to load the boat on will be on sale. For my new investors, this is a key lesson. The market will not run up indefinitely to the upside. I know it was fun in April and May, and I know it was fun in August when the market was running like crazy, but this is the after effect. When things are not certain, when the economy is not strong. So the stock market has done great, but the economy is not doing well. The slide begins to happen. For all my traders, now you have to start to look to short a little bit more as well. So the market will in time go back up, but every single week is not going to go up week after week. And if we crash before the end of the year, what should we do? We should recover in the first quarter of 2021. So I want to give you some dates and give you some facts to tell you when this has happened. So in 1987, 1990, October of 1999, the market fell apart in the last quarter of the year and they recovered the following year. This also happened in the end of 2015, the end of 2016, and it was really scary in 2018 when we had a sharp dip, and then January of 2019 came around and we ran off to the upside, and it was quite amazing. So for those of you that are new, that are experiencing this for the first time, the ride will be rough for a couple of weeks, and then after that, everything will smooth out for us. When have we not recovered? So I want to give you context for that as well. So when you tie in the dot-com crash of 2000 paired with the tragedy that happened of 2011, that's when we did not recover in the first quarter of the new year. And then also in a Great Recession. I think there's enough historians and documentaries about that, about why we did not recover. But those are the only two instances in modern history where if we drop a lot in fourth quarter that we won't recover in the first quarter of the next year. So typically with a question that people have, how do I feel about gold? Gold is good, but gold, as we talked about, has been running up with the rest of the market. So it's too high. You can look at the ticker GLD, which is the most popular ETF tied to gold. Gold is going to slide down as well. The bond market is a good hedge, even though we'll talk about it later. And I'll let Rashad Troy and our special guest talk about the bond market as well. But the bond market was too high as well. The only true inverted correlation with the market is the VIX. So I'll save the answer for that later. But gold is a good hedge. Thank you for this question. What do you do when you buy low? This is a great question. But you want to buy more, or you buy more and your average price keeps increasing. There's only one or two things you can do. You can dollar cost average, and you are going to see your average share price increase, or you can completely just load the boat, wait for one particular area, and only buy if it gets to that spot. Now, If you have the ability to buy 2,000, 1,000 shares, 3,000 shares, it would be great to load the boat. I know Trapper waited for Chipotle, as he calls it, for I think 3 years to get to a spot. And that's fine. If you have enough capital, you can wait for the market to drop to an exact area. What happens a lot of times is when people do this, you end up missing the mark, or it's short, or when it gets to your level, you're afraid because now it's dropped 15%, 20%, and now you think that it's going to bleed down 10% more. You don't do it, and what happens? 4 years later, you're like, man, I was waiting for the stock at 220. Now it's at 600. So if you have the discipline to wait for one spot, great, but there's nothing wrong with dollar cost averaging because it's better to be in the move than not. What are my thoughts on robo advisors? I think they're great. We talked about this before with Vanguard. I think the most important thing is to make sure you're getting into good indexes or good ETFs that have low expense ratios. Don't buy into the hype of any particular company. Just make sure to do your research. And for those of you in Canada, you guys can look into Wealthsimple. They have some good options for you, but robo advisors are very good if you select the right things. Another amazing question that I received this week: with uncertainty in the housing market due to lack of stimulus and homeowners heading into foreclosure, do I see this affecting home builders and retail short-term and long-term? The housing market is so hot. I don't see any issues of a housing crash anytime soon. Commercial is going to be the thing that I'm worried about. For anyone with properties, they will tell you this is one of the greatest markets that we've seen. And because people are moving out of urban areas and going and back into the suburbs, there's not enough inventory. So even with the housing market being the way that it is and the stimulus market not being here, there are people, this feels like 2007 all over again with some of the hype in some of these cities, Houston and Atlanta being one of them. So I don't think that the housing market will be greatly affected. It would do the exact opposite as it has been doing. What are my thoughts on compound interest? I think we all have heard the quote that compound interest is the eighth wonder of the world, but I think one of the things that we neglect to talk about is compound interest on the negative side. So this is why you'll hear us scream not to buy bad companies, because let's say if you're averaging negative 12 to 25%, let's just say negative 12%. What is the compound interest if you do that for 3 or 4 years in bad companies? Now, for those of us that have traded, we all know we can draw down negative 12% in a week, a quarter, sometimes in a day. But I think compound interest is great. We all have heard of the rule of 72. If you haven't, let that be your first homework assignment for tonight, to Google that. But I want us to play defense while the market is falling so we don't have compound interest working against us. And what's the best place to learn about different sectors? We talked about that before, but here's some homework for you. There are 11 key sectors. The homework item that I want you to do is from, in numerical order, I want you to tell me which sectors have performed the best over the last 20 years. So this is the part of where everyone says, hey, I want you to teach me how to fish. This is our first lesson for tonight, where you have to get into the boat and cast your rod. Should I focus on quarterly goals? No. I know earnings are very popular. It provides some volatility, but I think one of the biggest mistakes that corporations have made, and they have to play this earnings game, but I think it stifles innovation, because when you're trying to keep up with your competition on a quarter by quarter basis, I think it leads you to make some decisions that you would not make if you had a year or two to flesh out a full idea. So for all of you that are looking month to month or quarter to quarter, it's not the best judge. That's why I tell you the first metric, if you have a good company, is you should be looking 5 years out to see what the potential return could be. Thoughts on Sunoco? So I can't, tell you what to do, but and it happened today, I want you guys, please type this in chat, 10 years. Anytime that you want to get the perspective on if a company is doing well, look back 10 years. Sun is not doing well and has not done well. So if I look at the chart real quick, let me type it in, and we go and look back over time, we can see, and I'll just do 20 years really quick and pull it up. The high for that company was $59.99 back in 2014, and it's now at $25. Is that an asset that you will want to hold in your portfolio? Put yes or no. I want my assets to rise over time. And it's interesting, like we will hate something that gains 7 to 12% per year, but if something's down 30% or 40%, we think it's a good investment. Good company, just not a great stock to invest in. And we'll talk about this with our amazing guest tonight about what do we think about what will happen after the election. I know these next 2 weeks will be scary, but if we look at history tells us what happens after an election. For those of you that are voting for Biden, Democrats have historically done well in the stock market. Barack Obama, Bill Clinton being two prominent examples, although the taxes are dramatically high. Shout out to 50. I don't agree with what you said, but shout out to you.
You reverse the course on that.
Yes. Well, thank God, 50, because those stars subscription was going to get canceled. So, and then under Republican leadership, there's usually a spike, and then we settle back and we end up in either a recession or we have like an economic pullback. And there are pros and cons to both. But I want you guys to historically look, and let's take the political WWE stuff away. Just look at the numbers. Look and see what happens when each person is under administration and how it affects the market. But I think after election is settled and into the next year, even though the economy won't be the best because of COVID, and then we'll do a smaller version of shutdowns, not at mass scale how we did in March and April, the stock market will do well.
My graduates from my school being Forbes, bag drop.
Bag drop.
A mic drop, bag drop.
Bag drop.